How is the value of a Bitcoin decided? And who actually decides on how much it's worth? Well, the value of Bitcoin is actually decided by those who interact with the system, from miners, investors, blockchain projects, institutions, media outlets. Anyone that interacts with the Bitcoin system affects the value in some way. Now, when I say value in this context, I'm actually talking about the price value of Bitcoin. And the price value of Bitcoin moves up or down depending on supply and demand economics. But what does value actually mean? And does the price reflect true value? Can value even be defined as something else other than just the price? In this video, I'm going to break down the differences between the price value of Bitcoin and something called the intrinsic value. So value can be defined in many different ways, and much of it can be interpreted based on the person's perception of what value actually is. When we talk about the price value of Bitcoin, we know that the price is X when we see it at time Y. So when we look at the price, we know that that price fluctuates depending on the free market. So we know that the price is based on supply and demand economics because it's traded on open and free markets. So at any given time, the price of Bitcoin is what the market is attributing to it. Now, when we start to look into supply and demand for Bitcoin a little bit further, we know that the supply of Bitcoin, or the amount of Bitcoins coming onto exchanges to be sold, depends on a number of different stakeholders that interact with the Bitcoin system. These stakeholders must be increasing or decreasing the supply of Bitcoin at any one time in order to influence the price. Now, the most significant stakeholders that influence the Bitcoin price are Bitcoin miners, blockchain projects, investors, traders, and financial institutions. Now, breaking down each of these terms a little bit and starting off with Bitcoin mining, we know that miners are likely the most significant stakeholder when it comes to the suppression of the price value of Bitcoin, because new Bitcoins are minted through the mining process. And then these Bitcoins are sold on exchanges to fund the mining operations. So things like staff, computers, electricity, internet, rent, insurance, and other costs that normally form part of a miner's normal overheads. These miners are the only stakeholder responsible for the injection of brand new Bitcoins into circulation. So when we look at the data, there is currently 1,800 new Bitcoins mined every day. And much of these new Bitcoins are then sold on exchanges pretty quickly, so the miners avoid the price volatility. So this constant flood of new Bitcoins into the market fills up the exchange's sell order books. So basically what this means is if more Bitcoins are coming into the market, are filling up those sell orders, then you're going to see a price drop unless there is an equivalent demand at the time that those Bitcoins are coming onto the market, at which point the price would stay stable. A pretty good example of this is the period between the 5th of September and the 7th of November, when the price of Bitcoin has stayed around $6,200 and around $6,500 US for over a month. Now moving on to blockchain projects, and I don't think people talk about this one a lot, but I personally think this has a big influence on the Bitcoin price. And the reason is due to ICOs. You see, ICOs raise money in Bitcoin and Ethereum. After those projects raise the money, they need to sell this Bitcoin and Ethereum to fund operations. And some of these ICOs have raised millions and millions of dollars worth of Bitcoin. So once the fundraising period has finished, these projects then move into full operations and development. So they'll be basically selling these large quantities of Bitcoin or large dollar value of Bitcoin on exchanges, causing a consistent downwards pressure on the price of Bitcoin. Now, they need to do this because they need fiat money to fund operations. I don't think there's a lot of projects out there currently paying employees in cryptocurrency, and if they are, they've still got to pay things like rent for office space, electricity bills, license fees for software. They still have to pay that stuff in fiat currency. It's highly unlikely they're paying that in cryptocurrency, so to do so, they need to sell that cryptocurrency for fiat money, again, placing downwards pressure on the price. Now, in saying that, many of these companies might be using something called OTC or over the counter, where a third-party intermediary arranges essentially a private sale of large quantities of Bitcoin for reduced fees, and you're not going to see these sales on order books, so the price may not actually be influenced that much. However, the end recipient getting those Bitcoin may still be selling them on an exchange anyway, so I'm sure there's still a certain percentage of those Bitcoins getting sold on exchanges. But then other projects might just be selling straight to exchanges and not using OTC at all. So next up we have investors. And I actually originally thought that long-term investors were the least likely to be causing downward pressure on the price value of Bitcoin. But the interesting thing is research tends to show the opposite. The reason I thought this is because investors typically have a longer-term outlook. Therefore, you would think they are more likely to hold their Bitcoin during bearish times and are less unlikely to sell. Now, the reason I had this thesis is because long-term investors generally have a long-term outlook, so they're less likely to sell in a bear market. They're more likely to be hodlers of last resort and to keep those cryptocurrencies in deep cold storage. And when we have bullish times, you think that short-term speculators that are maybe less experienced in long-term investing are more likely to sell that Bitcoin on a bear market than an investor would. Now what happens is these hodlers of last resort end up keeping a large portion of Bitcoins out of circulation in deep cold storage. So basically they've got a huge chunk of these Bitcoins in hardware wallets stored somewhere and they're taking them out of the available circulation. So my thesis was this leads to scarcity in the market, and during the periods of a bear market, which we've just gone through for the last 10 months, this would stop the price going down any further because again, there's not enough Bitcoins coming onto the market to be sold. However, research undertaken by Chainalysis in April 2018 shows around 6 million Bitcoin is held by investors. But here's the interesting thing, is that short-term speculators are holding around 5.1 million Bitcoin. So by tracing the movement of Bitcoin between wallet addresses, Chainalysis' research showed that Bitcoin has significantly changed hands since December 2017. So long-term investors have sold around 30 billion worth of Bitcoin to new speculators. And they say that this rapid transfer from long-term investors to speculators during this short period is likely one of the major causes of the bear market for 2018, as the availability of Bitcoin traded on markets has risen by 60%. The day traders and the swing traders are the ones that love to ride the price volatility and to exploit this volatility to make money on the fly. So traders are primarily looking at indicators and looking at for opportunities to exploit price volatility or to arbitrage between prices on different exchanges. So these guys are in it just to make money based on those up and downs. They're essentially not contributing to the supply any more than they would be the demand. They're basically riding that roller coaster day to day, looking for opportunities to make buck. So overall, traders as system participants don't actually affect the supply and demand economics or that price value of Bitcoin really all that significantly. If anything, traders keep the order books flowing and keep global liquidity moving on all these exchanges. Now next up we have financial institutions, and by institutions I'm referring to the major regulated funds and brokerages that serve corporate clients. So this might be institutions like Barclays, Fidelity, CBOE, Grayscale, or any other major company that is playing with millions of dollars. Now these institutions are tricky to analyze from a price value of Bitcoin perspective because many of them deal on OTC markets, being over the counter, and they're those major private deals, and you won't actually see those deals or those orders placed on public order books. Now because these trades are not public, you're not going to see an immediate flow-on effect for the price value of Bitcoin either way. However, institutions buying OTC are increasing the scarcity of Bitcoin because they're locking up huge amounts of Bitcoin in deep cold storage, which could have a major effect during the next bull run. So that's the major influences around the price value of Bitcoin. Again, price value being the dollar figure we see that the market is assigning to the value of one Bitcoin at any time. Now that's out of the way, it's time to talk about the most exciting part of Bitcoin and what I find most interesting, and that is the intrinsic value of Bitcoin. So firstly, what exactly is intrinsic value? Well, here is a really good definition given by Investopedia. Intrinsic value is the perceived or calculated value of a company, including tangible and intangible factors using fundamental analysis. Also called the true value, the intrinsic value may or may not be the same as the current market value. Now, the above was given within the context of traditional companies and their stocks and equities. So these companies can be studied to try and find opportunities where a certain investor or researcher may see high intrinsic value but low market value. And that's the kind of opportunities like investing titans that Warren Buffett look to exploit. So we know that Bitcoin is obviously not a stock, it's a digital asset. So to understand what factors could be used to analyze value, we need to examine the Bitcoin network as an entity. And by doing this, we can then examine what forces may add or subtract value to it. Now, these major components are energy consumption, network transaction volume, exchange transaction volume, and financialization. Now, as most of you would have heard by now, Bitcoin's network consumes a tremendous amount of energy, and so it should. This is a decentralized network supporting $100 billion worth of current market value. Now, this process was intentionally designed by Satoshi Nakamoto to be resource intensive, and it does this for a couple of reasons. One being to ensure that the ledger of transactions contains a proof that work has been consumed, work in the form of electrical energy, and to also make it feasibly impossible to reverse or undo the Bitcoin blockchain. It also ensures that the reward of new Bitcoins to the miner are rewarded after real energy input has gone in to help secure the system. So when more or less miners join the network, the energy input goes up or down, and Bitcoin achieves this by automatically adjusting something called the difficulty. It does this to ensure Bitcoins are mined every 10 minutes, and honestly, this is a highly complex subject that really deserves its own video, but in an attempt to put it in simple terms, energy consumption goes up the more Bitcoin grows, and this growth being the network participants or miners joining the mining pool. So Bitcoin's energy consumption right now is around 73 terawatt hours, and has since stabilized in the last couple of months as not a lot of new miners are joining the network. So this energy consumption, this 73 terawatts, is equivalent to around the country of Austria. So it is a lot of energy, and I know this is a hotly debated topic all the time about the amount of energy that Bitcoin consumes. But not getting too involved into that discussion, one thing I just want to point out to you is that we know that real energy is being put into the system in the form of electrical power. And remember, this power is helping to keep a fully decentralized $110 billion network in operation, and it's also doing so in a safely and secure way. Therefore, my conclusion is that the energy consumed by Bitcoin is significant, and so it must be regarded as an intrinsic value of Bitcoin. Right, so moving on to the next topic, which is network transaction volume, and I'm glad to do it because talking and researching about mining literally melts my brain. So network transaction volume is another form of intrinsic value of Bitcoin. See, this piece of publicly available information tells us right away how much Bitcoin is actually being used. And when we define used, it's referring to Bitcoin being sent and received. It might be wallet to wallet, it might be wallet to exchanges, it could be exchanges to wallet, or another type of transfer. But this data gives us a window into daily usage of the Bitcoin network. As we can see, the number of daily Bitcoin transactions has drastically increased over the past 5 years. Around 2015, the number of transactions passed 150,000 per day. When we compare the chart to the price of Bitcoin over the past 5 years, we can see some correlations between price and transactions. Now, what I find interesting is that the transaction volume has been going up while the price value of Bitcoin has been remaining steady. One might perceive this as the intrinsic value of Bitcoin decoupling from the price value of Bitcoin, and could be seen as a potentially bullish sign for investors. Now, moving on to the next component, we have exchange transaction volume. And what this talks about is the dollar value of Bitcoin being traded on exchanges on any one day. This is an important factor because it shows the activity of traders and investors on any given day. So think of it as the economic psychology aspect to the intrinsic value of Bitcoin equation. Here is a chart of Bitcoin's trading volume in US dollars over the past 5 years. As we can see, the chart shows a strong correlation to the price value of Bitcoin. However, there has been some decoupling from this correlation during the later months of 2018, as trading volume has actually gone down while the price remained steady. This is showing us that short-term trading is actually dropping off, which is probably due to poor sentiment and less market participants basically getting involved in trading. It's also showing us that the supply and demand equilibrium point has been met in late October, and this could be seen as the true bottom of the bear market. I'm personally fascinated by economic psychology in traditional markets and in the Bitcoin market, and I think it plays a huge part in valuing and gauging market sentiment. Now, moving on to the last component of the intrinsic value of Bitcoin study, and that is called financialization. Now, when you hear this term, what it's referring to is financial products being created around a certain asset. So for Bitcoin, these are things like futures contracts, options, derivatives, and ETFs. So we know that Bitcoin doesn't have a lot of financialization at the moment, but it's in the works. We've got futures contracts, we've got a bunch of ETF applications. So financialization means products that are created from the base asset. Now, the way we measure the intrinsic value of Bitcoin through financialization is not the value the products actually bring themselves to Bitcoin, but actually the quantity and the frequency of these products being approved by regulators for Bitcoin. For example, when ETF applications are continually rejected, that's negative intrinsic value because it shows us that Bitcoin is not yet mature enough for regulators to approve the fund. However, as we draw closer to an ETF being approved, the intrinsic value is becoming a positive. The general sentiment for long-term investors is this ETF will soon be approved. So we know that the Bitcoin network has greater long-term intrinsic value as a result. And we also know that this will influence the price value of Bitcoin. Personally, I'm not sure financialization is actually a long-term positive for the Bitcoin network, and that's because some of these products may not require the physical holding of Bitcoin to actually operate. So essentially, you could have paper debt-based products produced off Bitcoin without the physical Bitcoin actually having to be bought off markets and be held. So you may actually not see any price value of Bitcoin impact with the more of these products that are approved. We're just going to have to wait and see. But regardless of that anyway, the financialization of Bitcoin as it increases will correlate to an increase in the intrinsic value of Bitcoin. So as we can see, there's a huge difference between the price value of Bitcoin and the intrinsic value of Bitcoin. But that doesn't mean interpreting this data is easy to understand, because honestly, it is complex at best, and economic theory around Bitcoin and cryptocurrencies is still very new. However, I strongly believe there is enough information to clearly separate the two, and we can see that the Bitcoin network's performance or usage does not always correlate with the price. Either way, how incredible is it that we have blockchain technology that is fully transparent, that gives us this incredible data that we can literally see fully transparently how much a network is being used, and we can have these kinds of conversations and we can explore these kinds of theories. It's really just incredible, and blockchain technology in giving us that is clearly a sign of the future. And to those that can use this data and to exploit its capabilities, opportunity is probably just around the corner. So guys, that's it for the video. I really hope you enjoyed it as always, and this one was pretty long. I did not expect it to be so long when I wrote this blog. I really hope you enjoyed it. I hope you got some value out of it. As always, make sure to give us a like if you did, and comment down below and let me know what you thought. Let's run another competition where the best comment will win a Bitcoin neon t-shirt, one of our own that we designed through our own merch store. There's a link down below. I'm going to send it to the best comment. So what I want to see is I want to know what your thoughts are on the price value of Bitcoin and intrinsic value of Bitcoin. I want you to tell me if there's any others that I missed that should be worth considering. I'll read through the comments in a week, and the comment that backs themselves up with the most logical discussion is going to win a free Bitcoin shirt. So that's it guys. Make sure to follow us on all our social media channels. Come and check out our blog over on cryptocurrencyoz.com. Heaps of really good information. Thanks again for watching the video. Have a great week, and I'll catch you in the next one. Cheers.